Okay, I wanted to show the longer term chart of the Dow. In the last video I showed you the daily, and then I'm going to show you the weekly for the Dow and the S&P and the NASDAQ. Okay, as you can see, the weekly chart, I'm going to kind of show you where we held 11.8, and then the last few years of the chart here. Let's see. So I'm going to go about right in here, and that's where we held. And then if I show you the longer term trend from 2009, we'll see this in the newsletter as well. This trend here is powerful. So what you can see, we broke up into the upper end of the trading range, and then longer term, we could look at Dow 13,000, which would be right here. So this is the bullish chart for 2012, and as you can see, that test we had on Monday was just to the bottom end of this rising wedge. This right here is a bullish wedge. Like I said, if we break out, continue to break out, then 2012 is going to look good. But the key for this week will be Wednesday in the Italian bond auction. The yields are near 7%, so it might make some people nervous. Now, going back to the S&P here, I'm going to show you this real quick. And it's kind of like it's going to look just like the few charts we just went over. And I'll show you how to play the S&P on a breakout. We'll do the daily real quick. Let's see. Okay. Now, for the last few weeks, we've talked about the 12,000 level. So let's go ahead and highlight. I'll draw resistance here at 12. So 1200. So there you can see last week where we held, which would be this green, well, now it'll be a black circle. Let's see, right here. Okay, this was Monday's low right here. Then we had Tuesday, Wednesday, Thursday, Friday, and we broke above 1250, which was key for us. There you can see the breakout above 1250. Okay, now we need to clear 1275, which is right here. And then if we clear that area, let's undo that. If we clear this area, then you can see how we could run to 1300 or plus. Here's 1275. And you can see right in here, right up through here, and then actually this is kind of where we closed at, right at resistance. So the 200 moving day average is right here at 1259, 1260, and if we do get that break over 1275, then you can look to play the spiders on that. And that symbol is SPY. So let's take a look at the options here. As you can see, it mirrors the S&P 500. And then again, I'll show you the weekly options. The December ones expire this Friday. So you could play the if if we rock it up to 130, I don't think we'll do it by Friday. We could, because it's going to be light volume, and again, it'll depend on Wednesday's action. But as you can see here, if you want to play the move over 1275, you could use these weekly 127 calls, which are at 77 cents. So basically, I mean, last video I said you could do 10 contracts, which this would cost you $770, or you could do 5, or you could do 2. It depends on how big your trading account is. Now, since I told you that the Santa Claus rally would last through the first 2 days of January, again, the January calls would be a little bit safer, and then we could, no bad news, we could rally up till earnings season, which is January 9th, and that's when Alcoa will report. But again, if you want to play the run to 1300 on the S&P, you could look at these January calls, and they're going for about $1. So same deal. 10 contracts would be around $1,000. 5 contracts would be about $500. Now, again, if we break below 1200, then you'll want to come down here to the puts, and then you'll look at the put options. The 120s are going for 90 cents, but again, you would not play these unless the rally fades, and we break below 1200. Now, the other kind of couple trades I want to show you is the transports, which seem to be breaking out as well. So let's go back to our charts here, and then as you can see, well, let me do this S&P chart long term real quick. Again, it's going to look just like the Dow chart. And you can see 1200 here. Okay, we got the support held, and then we broke above 1250 here. All right. So there's 1250, which held, and like I said, we're going to try to rally up to 1300, which would be right up here. And then as you can see, this is kind of where the support, resistance is, right through here. Kind of how we've traded above and over and under it through it all year. So again, if the longer term chart shows that we're still in a rising bull market. Here's the 2009 lows, and then you can see this solid uptrend line here, which breaks right here at 1200, and then again our line in the sand where we would turn bearish would be at 1150, and that's when we could see the market pullback or market correction, or we might not even get that because all the charts are looking bullish. So that's the longer term of the S&P and the Dow. And then if we want to look at the NASDAQ real quick, it's not holding up as well as the other indexes. And again, tech's going to be the wild card for fourth quarter earnings, which are going to start in mid-December, specifically January 9th. So we'll just do the long-term chart. And 2600 is going to be the key, or 2550, for us to hold on a pullback. And as you can see, 2600 is right here, and that's kind of where we're at. Now, our line in the sand would be 2450, which we're going to show you here real quick. 2450, 2400, and you can see, I'll show you some support here. But if we break below 2400, then the Nasdaq's going to pull back pretty hard. Right there, and then there. That's why we said 2450. So as you can see, the Nasdaq is still below the 40-day moving average, which is why we've kind of listed 2675, 2700. Now, 2700 is going to be tough to clear. You can see a lot of resistance is going to come in up in this area. So that's why we're not, going to play the Nasdaq, or we could play the Qs, but we think the S&P and the Dow might be the better trades if we do break out for next week or two. The other thing I want to show you is the transports, and that symbol would be, let's get a chart for it real quick, IYT. And you can see kind of where the transports are going to be breaking out, and there's two ways you could play this. You could play this index, or you could play FedEx, but let's stick with this one real quick. You can see here the break above 87.50 was bullish.
One of the things that Mark did that was very smart by going to Palo Alto was to actually enter the petri dish of entrepreneurs,
Okay.
particularly for new technology.
Okay, this is where it broke below support. This is kind of where it tested support and broke out. And then we spent a few months doing testing and back testing. Broke out here, came back down, tested support at 85, which would be right here. So if you want to put this trade on, you could play the move up to, it looks like 92.50, maybe 95. I'll show you that real quick. But if it falls back below 87.50, then you would look at buying puts, obviously. So if we do get the run up here to 95, we've got 5 points to run. So this is where resistance will come in, and this is kind of where we're looking for this index to trade to. So to play this, you could use the options, and we would just type in IYT, and as you can see, it's at 90.13, and then we go to the options. These don't have weekly options, so you would have to play the January options. And it looks like you could play the 91s, the 92s, or the 93s, kind of depending how you your portfolio and the size position you want to take. There is a kind of wide bid-ask spread, as you can see. The 93s, they're bidding 75, and the ask is 110, which is kind of why we would shy away from this trade. So that's how you would play this on the upside. But let's look at FedEx, which have a little bit, the bid-ask is a little bit tighter, so we'll be able to get into that. All right, new chart, don't save. All right, so we'll bring a chart over for FDX. Okay, this is the weekly chart. We'll do the daily chart because that's all we're worried about for the next couple weeks. Zoom in. Okay, FedEx closed Friday just below 85, as you can see right here. And it's kind of like major resistance, and if we break above it, then we should run to 90, which is also another 5 points. So let's draw 85 on here for you real quick. Okay, here's the 85 level. As you can see, this is where it fell back. It tested 85 and then ran up to 90, 92. I think we've had a few trades on FedEx this year. I don't know the time frames, but as you can see, we broke back below 85. We've had a call option trade on it. I'm not sure if we played puts on it this year. I'll have to check the portfolio, but FedEx is one of our favorites to play because it's really liquid, which means you can get in and out of these options quick, kind of right near our bid-ask prices. So here's the break above 85 we're looking for. You can see all this resistance. So if we get that break, then we're going to look to play it up to 90, which would be kind of right here. Okay. Now shares did close above their 200-day moving average. And we'll show you that right here. Okay, so that could be, you know, your stop target, or you could go with the 50, which was right around 80. So to play this breakout, we would look. Well, let me show you this real quick. Here's going to be resistance right here at 90, and then the break back below 90. So if we get the 5-point run we're looking for, maybe even more, we could look at the options on FedEx. These might trade weekly. Nope. Okay, they trade the monthly, so we would go to the January call chain. And with FedEx at 84, 85, we're looking at a move to 90. So we could play the 87.50s. Now, if FedEx does make a move to 90 and you hold these through expiration, which is the 3rd week of January, then these calls would be worth 250 minimum, which is a 150% return. So these are some of the trades I wanted to show you. I'll probably list the transport trade and the FedEx trades on Wednesday, but our portfolio is kind of open right now. We like the Pepsi trade we've got going on. Let me see if I can pull it up on this chart. So you can see Pepsi can move, and we've already closed down a half position, but we're hoping these August calls, the April calls move as well. Yeah, I got the wrong chart. There we go. I was typing too fast. All right, let's try this again. New. I'm getting there, folks. Sorry. All right. We've played Pepsi before, and as you can see, we've always played it up to 63.50, and then we got that breakout above that level, 63.50, 64. So if we draw 64 on here, you can see the breakout. You can go back and look at our portfolio for the year, and then you'll see where we played Pepsi. I think we played it down here in the 60s, and then we rode it up to 63 a couple times. But this break above 64 was pretty bullish. Test there, break above there, and then we've kind of been doing this until we got the next leg up. Now, our longer term view is 70 plus on this stock, which is right here. We're 69.70. So you can see Pepsi still has a little bit room to run. That's one of the trades we're still bullish on. Let's see. And then the Chesapeake trade, we kind of like that. We showed that move in the newsletter, what we're looking for over the next few weeks. So when we got in the Chesapeake trade, the 22 level held. Which was key to us getting in this trade. Oop. It's right here. And then, like I said, I think we're going to get the run to 24.26. Shares closed at 23.73 on Friday. So let's see where support held for 22. Kind of right here. Kind of right here. And it fell below support. And it came down to 20, which is why we said backup is at 20. Okay, there's backup support. So if Chesapeake falls back below 22, that's when we'll get out of the trade. But we're looking for this run up to 26. And then I'll show you resistance there. See right here, resistance, resistance, break above resistance, which is when it ran to 30. Now, as you can see, this time frame last year, December, shares made a huge run up to 30. I don't think we'll get that same run from here up to here, but as long as we get over 26, this is going to be a nice trade for us. I will try to get back to you in the next couple weeks to show you how to play earnings season, which is coming up in a few weeks. Alcoa will be leading things off. We don't really agree with the company getting that title, but that's the way it is. And I'll show you how to look up earnings. But I'll show you real quick Alcoa company events. They're going to announce, like I said, January 9th. And then to get a calendar or to see what's who's reporting that whole week, just go to the Yahoo site, type in earnings. And then you'll see the calendar here for upcoming earnings. All right, here's January 9th. Here's Alcoa. So to find trades coming up for earnings season, because we think it's going to be pretty volatile, this is how you start looking for them. You would go through and then pick out some of the better names or the worst names that you think are going to beat earnings or miss earnings. Let's see something real quick. I'll just go through a few of these. Let's see. Doesn't look like, okay, JP Morgan will report Friday, January 13th. So, you know, we'll watch JP. We actually have a trade on it now, but a break above 34 would be bullish. And then you would go into next week, and then you would start looking at the other companies reporting. You know, look at their past earnings, how they react to earnings. We'll go over all that in the newsletter, but this is how you find the earnings trades, and I will try to do a video in the next couple weeks. But hopefully everything I've shared with you today will give you some ideas to play hopefully a impending run to the top of resistance or a breakout. With that, I'll see you in a couple weeks, and good luck with all your trades.